Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this, this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each one have a return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be following on from the previous video by asking more questions in terms of Meta Materials and what happened in terms of the bankruptcy, with more questions from the viewers. And we're also going to be looking at MMTLP and looking at the question, how can the 40 million shares lead to potential resolution for the retail investors? So before we get started, let's have a look at what's happening in the market. So first headline here from Yahoo Finance, we can see the inflation data, retail sales and Walmart earnings await a jumpy stock market. So it is going to be an interesting week. And we can also see here from Market Watch that the US stocks are facing a bumpy road to recovery with inflation and earnings on the horizon. And I think inflation is the big one for markets. So let's have a look at key US economic data expected this week. So PPI inflation Tuesday, CPI inflation Wednesday, and jobless claims Thursday. These are the three key things that I think will drive the markets and hopefully positive. And finally, let's have a look at another big week here for earnings. So we can see quite a number of stocks being called. So we're also going to be keeping an eye on stocks such as Cisco, Walmart, Baba, Signal Lithium and JD. Let's do a follow-up on the previous video where we looked at Meta Materials, the end, and the company no longer exists. There was a significant number of questions and reactions to the video and to the news. So first of all, David here stated, can no one make the board of Meta Materials pay for the crimes they've committed? And that, I think, is referring to the current board. What goes around comes around, hang on in there, investors. So we're going to look at what could be done shortly as well. Lockup has stated he's sure that the CEO and the board were paid by the hedge funds to collaborate and collapse the company. I think that's a strong theory. It's an interesting theory, and it's also a theory I'm not going to rule out. And he's also stated symbol after symbol, that's what they do. That's how they get away with counterfeit shares and make everything disappear by magic, because it's important to take profits. So if we think about the benefits of the hedge funds and the shorts, when a company goes bankrupt, or the benefits are huge. What Invictus has stated, it says they will now liquidate assets to pay off the creditors. What is left to liquidate? Because obviously most of the valuable assets have been sold. So it will be interesting to see if there is nothing. Wouldn't that show some form of collusion and premeditation? So let's have a look at this question. And the question here dealt with by Rare DD is, if a board of directors appeared to be purposely destroying a company, are there consequences? So that's the question. So the reference here is for Meta Materials and the current board. So if the company files for bankruptcy and the board members are no longer with the company, can they still be pursued for legal action? So the answer to this question, according to AI, is yes, there can be significant consequences for the board of directors that appear to be purposely destroying a company. I'm assuming we would need some significant evidence for this, and maybe George Padikaros would have access to this because he has been in direct contact with the company. His solicitors and his lawyers and attorneys have also had correspondence, and he has made a number of requests, and I believe he's not had satisfactory responses. So let's have a look at the legal actions. So these include shareholder derivative suits, securities fraud legislation, other claims such as obviously personal litigation that's similar that is happening with the MMTLP fiasco. And in terms of regulatory intervention, I think this one I don't have too much hope for, and that is the SEC, who could in theory investigate, and they would be investigating from the point of view of securities fraud. But if obviously a conspiracy theorist would say if there's a conflict of interest there, then the SEC have no interest in investigating. So before we look at how the 40 million shares could potentially give us resolution, shout out here to Scott again, and following up on from the previous video, he's now stated, I've got about half a dozen solid proof of facts to submit the second amended complaint. So go ahead and check out the previous video where we did an update on his complaint and also an update on the $1,275 per share ask that Scott is bringing in his case against Charles Schwab. So he also states here, this is part of it. He's going to need the judge's permission at this point, but it should be clear even to the most unbiased viewer that FINRA is a captured regulatory body, and it even has its own internal stock exchange. And from my point of view, I think the biggest single piece of evidence for this is who is actually funding FINRA. And I think the funding system of FINRA includes the broker dealers quite significantly, and I think that is basically enough of a situation that it needs to change, because there is a highly significant conflict of interest there, especially if broker dealers are also on the U3 halt panel. So that is something that again is quite staggering, and Congress have not yet looked at that. So let's now move on to NextBridge, and we can see here what Lillian has stated is she believes that Wall Street has awoken the beast in NextBridge Hydrocarbons. I'm not sure what the next move from McCabe is going to be, but I'm confident it's going to be big. Cover your ass or cover the shares. I sense an incoming nuke. So potential news coming according here to Lillian, and let's wait and see, and obviously enjoy the show. So the question here has been asked by Pocahontas, and that is, okay, what if the approval of the S1, McCabe can sell 40 million shares at a premium price per share? Would NextBridge Hydrocarbons be in a position to provide a dividend to shareholders? Would that prompt any action from the brokers? Would that cause brokers to reconcile? Just wondering. So these are just great questions, and what Jay Crocker said, he's not knowledgeable in trading as a majority of folks are, but if a short position to buy up the 40 million shares will clearly contradict FINRA's assertions of the 2.6 million short position. So I think that is a great point. I think that is something that we need to have, and I think that will probably directly implicate FINRA in having in sharing with us incorrect information, and you could also, a cynic would also say that FINRA have been proven to be lying. So let's go back to this 40 million shares. So if we, let's say, for example, Greg McCabe were to do a deal for 40 million shares, and the shorts were prepared to pay, let's say, $1,000 per share, and then that, in my opinion, would be enough for the company to secure funding. It would be enough to pay everybody a dividend, and it would be enough to secure the future long term for the company. And I'm sure many people would also find that as a form of potential satisfactory resolution, and obviously we would also hold the NextBridge Hydrocarbon shares. So again, it's a theory, and only Greg knows, and I'm sure Greg is not going to sell the 40 million shares cheaply. He is certainly going to hopefully make the shorts pay. And finally, let's share with you a quick review of the previous week's weekly watch list, where we called out a number of stocks. The market was a little bit jittery last week, but we did see a little bit of an improvement. We called out MGOL, great call, the best call of the week. That was up 68% on the week, so congratulations to everybody on that. We called out Eli Lilly for an earnings beat, and after earnings it went up 10%, and it went up the next day as well after that. So overall up 17.6% on the week, so congratulations to everybody on LLY. CLPR, that was up 6.2% on the week. ASTS, another good call, that was up 18.6% on the week. HLN, that was up 2.1% on the week. AEHR was another call. Chance to take profits on Monday when it was up 13.4%. Then there was a sell-off, closed down 2.2% on the week. TNDM, that was also up 15% Monday to Tuesday, given opportunity to take profits. Then there was a sell-off, closing down 4.6% on the week. So not all calls are successful. So if you would like to get a copy of the next weekly watch list, details are in the description below. Thank you very much for watching. Please stay tuned.